How has the real estate market been recently?
Not the greatest.
What about property values?
Property values have dropped. Still cannot qualify.
Government regulations?
I am going to stress enough here.
The homes between $1 million and $1.5 million now.
Affordable for them.
What's the downside to that?
They have to pay more interest.
First-time home buyers?
Where's my income? You have 15 years to pay it back.
What do you think of that?
The first-time home buyers are the winners.
Welcome to the Mortgage Den. I'm Nick Da Silva. I'm the principal broker here at Northwood Mortgage. With me today is Nirvina Shamshudin, one of our mortgage brokers. Northwood Mortgage, just to give you a little bit of a history, has been around since 1990, and we are located in the GTA and we serve southwestern Ontario. This podcast is to discuss the new rules that are being introduced by the federal government. For all intensive purposes, today is November 27, 2024, and this podcast will be rolled out shortly thereafter. So let's get right into it. Nirvina, how has the real estate market been recently?
Not the greatest, according to me.
And why not? What have been the hindrances to the real estate market in the last year and a half?
Clients qualifying for the mortgages, if they even apply, they are not able to based on income.
And what's affecting the income? The increased interest rates that we've seen?
Increased interest rate, stress tests, because with the interest rate so high, they do have to qualify based on the stress test or the qualifying rate.
And just so you guys know what a stress test is, it's a 2% interest rate addition to the contract rate when people have to qualify for a mortgage. What about property values? Where have the property values been in the last year and a half?
Property values are on the high side. In some areas, property values have dropped, but the client still cannot qualify.
Government regulations, have they tightened up?
It tightened up, but they also extend to the 1.5 million. So a client can go out and buy a house at 1.5 million. But I've seen a lot of clients since this came out, a lot of people are waiting for December 14th to when this will take effect on the insured side. Still, people are coming in to get the pre-approval, and I still can't qualify them for this.
All right, so let's talk about the new rules that the federal government has just instigated. They're coming out December 15th of this year. Let's talk about the first one you talked about, the insured cap rate on homes.
1.5 million.
Previously, it was
1 million.
So now people who don't have the down payment but have the income capabilities can qualify to buying a house right
for
up
less
to
than
1 million.
20%.
What does that do for the market? Does that create more competition in the market?
It does create more competition, but again, I'm going to stress enough here. It gives us the client the buying power, but the qualifying is the issues here. We're not able to get that qualifying for them.
But if they could qualify...
If they could qualify, it's all good for them.
The homes between $1 million and $1.5 million now become a little bit more...
affordable for them. Instead of paying the rent, they can afford to own their home.
What about first-time home buyers? What has the government done with this 30-year amortization that the first-time home buyers can actually use now?
They can afford it.
They can afford...
more of a buying power.
Which means they can now qualify to buy starter homes, which are over $1 million. But what's the downside to that, having a 30-year amortization?
They have to pay more interest. They will end up at the end of the 30-year amortization pay more interest on their mortgage at the end of the term.
But they're now able to afford a house.
They're now able to afford to going home ownership.
And paying more interest down the road.
More interest, yes.
So that's something that they have to weigh when they're doing this.
They have to weigh that. So when we sit with our clients, when I sit with my clients, I go through all from starting to ending, qualifying. This is how much if you do a 30-year amortization versus a 25-year amortization. Do you have 20%? Do you have 5% down?
Now, again, for my public out there, a first-time home buyer is someone who has not purchased a house in the last 4 years or owned a house in the last 4 years, or is someone going through a marital breakup and looking to buy a house. Now, builders, if you're buying a home from builders, again, the general public, not just first-time home buyers, can actually take an amortization up to 30 years. What does that do for that market, the newly built homes that the builders are trying to bring to the market?
For existing owner or for brand new owners?
For anyone who's buying a home from a builder today, they can get an amortization up to 30 years. So what does that do for them, for the builder?
Their first-time home buyer, they currently own a home.
Right, but the 30-year AM for builders is for everyone. So it just makes it more attractive at this point in time because builders have been struggling.
But if you currently own a home, you cannot buy a second home with a 30-year AM.
No, but if you previously owned a home or you own a home and you're buying a new one to move into, you're buying from a builder, you can get a 30-year AM.
Yes, you do get a 30-year AM, but again, qualifying for that 30-year AM. Also, if I had purchased a home 4 years ago or a year and a half ago and I had income and I could get that qualify from the builder at that time. When I'm ready to close this file right now, where's my income? Like, I would have to requalify based on my income and my credit.
But now you can qualify using a 30-year AM.
Yes.
As of December 15th of this year.
Yes.
First-time home buyers, again, some of the advantages that have come out to them. They can now withdraw
$60,000 of their RSPs. They have 15 years to pay that back. The repayment, 15 years, up to $4,000 a year. If they don't pay that back on a yearly basis, that will add it to their income, and they will have to pay taxes on that.
They've increased the amount that you can withdraw from your RSPs from $35,000 to
$60,000.
What's the benefit of that?
It gives them more of a buying power too, also there,
Right?
Because they can afford to put that down payment and qualify.
And what's the drawback to taking out $60,000 out of your RSP?
You have 15 years to pay it back, either $4,000 a year, or you pay taxes on that $4,000 every single year.
So Nirvina, the government has also rolled out a new insured refinance program for people who want to add a garden suite or a rental unit to their existing homes. It has to be owner occupied, and it has to be for long-term rental. What do you think of that?
Well, it creates more housing.
Which is what we need, right?
Yes.
We have a housing shortage.
And you also become a landlord.
So it creates some rental income for the homeowner, but
still have to-
the downside is you now are a landlord.
You're a landlord, which you still have to file your taxes on the rental income too.
And you have responsibility as a landlord.
Yes.
So Nirvina, who is the big winner with this new government policies that have been rolled out in the mortgage industry?
The first-time homebuyers are the winners because of the longer amortization also, the 30-year amortization.
Allows them to do what?
Allows them more buying power again, providing they fully qualified.
So the first-time home buyer has the foot up on an existing homeowner trying to buy the same house because they can have a longer amortization, which allows them to qualify for more.
For more. If I go now, I'm a current homeowner, and I go buy that same property, I have two mortgages now. I may not be able to qualify. As a first-time home buyer, you will.
All right.
Again, based on the income.
First-time home buyer, again, the big winner. Again, $60,000 of RSP money. That's a good chunk of money,
Yes.
right? That helps them.
They also can have gifted funds.
Right. And that helps them to buy those properties
That's right.
over the $1 million price tag.
Yes.
Now, why is that important? I mean, are you seeing starter homes over $1 million these days
In the last 6 weeks, yes. Starter homes are over $1.3 million.
in the GTA?
Yes.
Makes it much
GTA.
more difficult.
It's more, and we are finding it difficult with some of our clients, although they're not even first-time home buyers. They sold 4 years ago. They're trying to get back into the market now. And yes, they have the $200,000 down, but they cannot find anything lower than a 1.3, 1.4. Although they have but the income that they have, a husband and wife making this income with that $200,000, their stress test, the high interest rate, and the stress test to qualify, they're not able to qualify. Yes, we understand that the 30-year amortization is there. We can stretch out all we want, still can't get it done.
Thank you, Nirvina. And that's the Mortgage Den for November 27th, 2024.